So, good morning and welcome to this webinar on why eSign fails in rural India and how to fix it. Let's begin. So, just a quick note, we will be sending a recording of the session to your email inbox in the next 48 hours. So, don't worry if you know someone who's missed it. I'm your host Aditya. I head marketing at Legality. Today, I'm joined by Shubhesh, our senior product marketing lead, and he will be showing us the live demo portion of this session. So, a quick recap of the agenda as we begin. In the first section, I'll be dealing with the 7 failure scenarios that cause e-sign processes to break in India, going in detail as to why they happen and giving you an operational fix for them. At the end of this section, we'll give you a clear framework on how to actually fix these, right? Then I'll be showing an ROI model to help justify the investment in switching to eSign. Then we'll be showing you a demo of a rural ready document execution flow. And finally, we'll be throwing open the floor for open Q&A. In case you have any questions during the session, please ask them in the Q&A box below. We'll take up all the questions by the end of the session. In case you want to ask your question openly with mic access, then wait till the Q&A session, which will be about 35 minutes from now, and we'll give you a chance to ask your question verbally. And finally, yes, just to recap again, we will be sharing a recording of this along with the webinar deck within the next 48 hours of the session ending. Before we start, a bit about Legality. For those of you who are new to Legality here, we serve multiple MFIs, gold lenders, agri lenders, and KCC issuers, many and most of whom are in the process or have already built digital document execution flows with Legality for rural India specifically. Working with our clients in rural areas, we managed to achieve significant impact, right? Over the past 4 years, approximately 40 million documents have been executed for various rural lending use cases, gold, MFI, KCC, agri loans, and all kinds of documents, right? From loan applications to sanction letters to core loan agreements, KFS, and hypothecation docs, terms and conditions docs, lot of documents, right? In this webinar, we'll be distilling our learnings from these implementations and giving you a framework with which to implement an e-sign flow that actually scales in rural lending use cases, one that actually works, right? And fundamentally, the lessons of this webinar are applicable to everyone, whether you use Legality or not, because we dive into the first principles of the actual blockers and how to solve them. So let's dive in finally, the failure scenarios that cause rural lending to fail, right? Some context first, why it happens, right? People think that eSign is a very simple integration that you do to your paperwork process, right? You just take an eSign API, do an integration of the simple tool into your paperwork process, and boom, you're ready to go. It's two smooth pieces in a jigsaw puzzle. But this is not true, right? Reality is a lot more complicated than that. The typical eSign implementation process, especially for high volume rural use cases, often looks like what we're showing you on screen, right? You conduct a months long evaluation of eSign software with great excitement. You onboard it, you perform testing and integration in a few settings, and then you do a scaled limited go live in a few branches. And then 6 months later, you are stuck where you started, right? You're unable to actually scale up. People on the ground in your branches are still using the physical flow, they're not using the digital flow. You are basically largely still default paper, right? We assume that you are attending this webinar because you don't like this scenario on screen or have some experience with this scenario on screen. You actually want to ensure that when you switch, that your default becomes digital and paper is the exception. So people, when they come to Legality for rural lending use cases, they've usually tried a simple e-sign process before and they failed, like the scenario on the past screen. And speaking with them over the course of the last 4 5 years, we've identified 7 failure scenarios that they faced in their previous implementations that we worked with them to solve. So there's 3 broad buckets, 7 across 3 broad buckets. One is where the e-sign flow fails on a fundamental technical level, like where the tech itself prevents it from being used. There's 3 points under this. The second bucket is where the flow is working technically, but does not actually work practically on the ground, right? Two reasons are because, say, Aadhaar eSign is not possible. And third reason is that modern eSign interfaces are in English. And the final bucket, the flow safety and security. When companies switch to a digital process, they often find fraud does increase, right? We'll show you how to prevent that in your eSign process. So let's come to the first fundamental problem, right? Making sure the flow works at a fundamental technical level, right? So you've implemented eSign and your branch or field officer on day one goes to the ground for the first transaction, right? And this is very common in rural scenarios, not as common in urban. Your customer does not have a smartphone. You cannot actually, eSign works on a system of eSign links. You cannot send them an e-sign link anyway, anywhere, and they cannot open the app on their feature phone, right? So really the first recommendation is super simple, and you might be wondering why I'm saying this, but we're going to anyway say it up top, is your e-sign service, whatever you use, needs an SDK that can work on your field devices smoothly without extensive integration effort, right? An SDK that supports all the modes of e-sign you want to do, right? This is a no-brainer, bare minimum feature without which eSign literally will not work in your rural lending scenarios because you want to do it on the device of your branch or field staff, right? It sounds very basic, but honestly, people have come to us saying you have an SDK. That is what we were lacking before, right? So an SDK is the bridge that allows you to convert your branch or field officer tablet that they may anyway have into a device which you can use for eSign as well. So that's the first step, right? Apart from an SDK, sometimes borrowers in rural areas also share a phone, right? Like one phone in the family, or they know someone who has a phone and they use that phone for everything, right? As I mentioned, eSign works on a link system, even in API flow, even if you don't send out a link, a unique eSign invite is generated based on the phone number of the borrower, and you need this to record sign and timestamps for to prepare a proper audit trail. And most eSign systems have a limit of one number per contact, right? So if you have one borrower and you use up a number on them, you can't repeat that number across borrowers, right? So in your case of rural India, where one borrower group may be sharing a phone, for example, or a family is sharing a phone, you just won't be able to proceed with eSign, right? So you need your eSign system, second level, to have the ability and option to send multiple or generate multiple unique signing links on the same device, right? This is again not a very common feature we've seen in urban use cases, but it was a very highly requested feature when we got into rural use cases, right? So now we fixed our technical base. We have SDK support, browsers, like borrowers sharing the same device. And now your field officer goes on the ground to the borrower's location, a very common flow in rural India, to get the documents e-signed, right? In physical process, they would take the paper with them. In the digital process, they take a tablet. But then they reach the location and they find that, hey, this place only has 2G, 3G network. It doesn't have very good network, right? It is bare minimum network. And as a result, the eSign link is not opening on the device, right? When we do eSign demos in offices in big cities, we never consider this as an issue because we all operate in almost a 5G always on environment. But on the ground, if your field officer encounters a 2G, 3G network problem and the eSign does not work, they are not going to wait around. They are going to ditch the eSign process and switch to paper, right? For this, the solution is simple. Simply test your flow when you're testing in 2G, 3G settings as well, right? In the initial testing phase, do rigorous network testing of your flow in these low network scenarios. And in fact, in your pilot, if you're doing a limited rollout pilot, don't just pick the modern tech equipped branches. Pick some branches in areas with the worst connectivity as well. There's no way around it if you really want to test it out on the ground. So now our story continues. Our field officer here has, because it didn't work in 2G, 3G, has called the borrower to the branch for the signature, right? And a lot of you, when I was talking about 2G, 3G, would have said that, okay, the solution to that is not like a digital process. It's just ensure it happens in the branch where we have Wi-Fi that we can control. Great. So let's see what happens in that scenario, right? A branch-led scenario. So they go to the branch, the document loads, Wi-Fi is great. They try to e-sign, and just when they think they're about to succeed, they get an error message indicating that the e-sign provider is facing downtime, right? So Aadhaar e-sign, fundamentally, I think most of you will be familiar with it, is generated. The actual eSign is generated by entities known as eSign service providers. Think NSDL, Verasys, CDSL, right? These are eSign service providers who actually generate that sign that affixes on the document. And naturally, given the scale at which they operate public infrastructure, they sometimes do face downtime. And when they face downtime, you cannot proceed with Aadhaar eSign if they are your only provider, right? So your network Wi-Fi might be working, but if your eSign is not working, your branch is going to get crowded. Your field and branch staff will again switch back to paper. It's something they're used to, and it's working for them right now compared to eSign, which is facing downtime. So for eSign downtime, the solution is slightly different, right? And it's not the one on screen right now, right? Most eSign services will claim to have some sort of backup eSign routing, which bypasses this downtime. But usually when you unpack this process, this is what it ends up being. You face eSign downtime. Instead of, say, an automatic switch, you are required to manually escalate this as a ticket with your eSign vendor. The eSign vendor, presumably with so many other customers facing this issue, is swamped with tickets about this, as well as tickets about other issues. You keep trying to get a response, there's none for hours. You get teams are working to fix the problem. And then finally, hours later, could be even up to 12 hours later, is what one client told us. They managed to do the manual switching for your account. And then it works. Great, but it's been 12 hours, right? Where the downtime anyway would have passed in fewer hours, right? This manual process allows people to say that yes, during a demo I have this system or process, but it's really not a good fix for on ground downtime, which is usually 45 minutes to an hour, maybe sometimes even 30 minutes, right? You will need your system to actually kick into backup mode even for these 30 minutes. And so what you actually need to build is an automated eSign routing or switch system, right? A simple analogy would be like payment orchestration, where a payments orchestrator will load and connect your customer to a payment gateway that is facing the highest success rate at that point in time, right? From a set of multiple payment gateways, which they have an option to route to. So similarly for eSign, you will have multiple different ESP connections, not just one, NSDL, Verisys, CDSL. And the system will then route customers or signers to the ESP facing the highest success rate at that point in time. So on one hand, you have multiple eSign connections. And then once you have this, you have a system of auto routing where for the customer, the experience is unchanged, or your field officer, the experience is unchanged. They open the document, and at the back end, the system automatically decides which ESP is going to display to them, maximizing the chances of success. So some data from when we first implemented this in our platform, when we implemented an eSign auto routing, what we call our eSign reliability system, we saw that within a few months, we saw an 80% reduction in failed eSign attempts. 80%. So that's the first set of blockers that we've discussed. Getting the flow to be usable on a fundamental technical level. Just quickly recapping what we've discussed, you need to test that it works on a 2G, 3G connection. You need to ensure multiple eSign providers are plugged in and an automated routing or orchestration system is in place. You need a robust SDK that works with all eSign types that you need. And you need the ability to generate multiple eSign links with the same borrower device. We will be sharing this document along with the rest of the points in a consolidated checklist with the deck within the next 48 hours. So don't worry about capturing all of this on screen. So far, we've discussed the first layer, which is how to make your flow technically feasible. But that was the easy part, right? Now comes the hard part, making your flow practically feasible. And this means that ensuring the customer and field force actually value the flow and can easily use the flow, right? And this leg that we're going to talk about now is the number one cause of failed eSign implementations, because central office is keen. Yes, we need to go ahead with eSign. It will do good for our organization. But customers and field simply don't share that enthusiasm, right? And in a tussle between your field force and customers, and say a central office mandate, there is virtually no chance of the central office winning this battle, right? The only way to actually win it is to design an accessible flow. So what does that mean? Let's go back to our story, right? You have the technical things in place. 2G, 3G connectivity, device issue is solved. The lender has backup eSign, in this case, routing in place. And they go to the customer thinking, yes, now I can actually do eSign for this transaction, right? So the link loads, the document loads, they proceed to the eSign screen, and then they're again stuck, right? Because it turns out that the borrower doesn't have a mobile linked with Aadhaar So there's no way for them to actually get the Aadhaar OTP to do the e-sign. Lenders prepared for this. Lender says, doesn't matter. We are not reliant only on OTP. We also have biometric available. So they try biometric, but again, the customer's fingerprints are faded because they're faded because of the hard manual work they do every day. And this is very common in rural lending use cases, right? And they can't sign, right? Again, because the biometrics are faded, right? So this scenario I've described to you, or these two scenarios I've described to you, do not, of course, happen in a majority of cases, but they happen in a significant minority of cases, maybe at least 10 to 15% of cases, where for some reason or the other, the primary modes of Aadhaar simply do not work. And 10 to 15% of cases is a large number of cases, enough to make your field force actually switch back to paper because it's just easier rather than keep toggling between the two. So how do you actually fix this? So the solution to this is simple, is to avoid reliance only on one or two modes of Aadhaar eSign. Many think I have OTP and biometric, I'm sorted. Really, like eSign is not just this. What you actually need is a bouquet of eSign options built into your flow, right? Aadhaar face and iris as well. Or if Aadhaar itself doesn't work for some cases, you need backup options to Aadhaar itself that can keep the flow digital, right? And this fits in with our earlier understanding that this is not simply a simple eSign implementation. This is a full infrastructure implementation. So you need in the backend support for all or many eSign types. I want to go on a slight detour right now and talk about one of these types, which is Aadhaar face sign, which I mentioned just now. This is a very underrated eSign type that a lot of lenders, especially for rural lending, are sleeping on, because all Aadhaar face sign needs is your Aadhaar face RD app on an Android device, basically the device that your branch or field force already carry. You just need one app install. And once that is done, it's a simple one-time config. You can actually collect eSign via simple face authentication, right? And lenders are finding this to have immense value as a backup to Aadhaar, OTP, and biometric, because ultimately, like your customer may not have a phone linked with Aadhaar, they may not have workable biometrics. They will definitely have a face that is registered with Aadhaar. And I specifically wanted to spotlight this because this type of eSign is actually, people have a misconception that this is somehow more expensive. It's the same cost as other modes of eSign. But unlike biometric eSign, it doesn't actually need an extra device. Your existing field tablet can be converted into a face eSign device, right? So lenders often hesitate at things like biometric because of an extra cost. Face eSign can also be a great alternative there, because you don't actually need the cost of that biometric device, right? And it's available as we speak. Already more than 27 lakh face eSigns have been done via legality, usually as a backup to a primary mode of Aadhaar eSign. So now back on track from that slight detour. So what do you do when you have multiple eSign options at your disposal, right? You don't want to just offer all of them at front. This will cause confusion if you give 6, 7 options. And you don't want your field officers to directly switch to non-Aadhaar because that option, just because that option is available, right? You want them to go try Aadhaar first before switching to non-Aadhaar. You don't, like most lenders have a preferred eSign type, right? A preferred primary eSign type. So your flow needs to focus and prioritize that option first without leaving it to the discretion of the ground staff. So for this, what you need is an eSign cascade system, right? And here's one example of a cascade system. Let's say you set up a preferred option or set of options for eSign. These are the ones which will display first. Let's say your first preferred option is Aadhaar OTP, right? So the customer tries Aadhaar OTP first. Your field officer has no control here. Aadhaar OTP is offered as the option. They try to do it once. Let's say they try it once and it doesn't work. They try it again and it's not working, right? Here in such a system, you can set a number of failure attempts for your primary option that you will tolerate. Once that failure limit for that primary eSign option has been breached, then the cascade system on the next retry will surface multiple backup Aadhaar options, right? Like Aadhaar biometric, Aadhaar face. So let's say in this scenario, you decide, okay, Aadhaar OTP, if it doesn't work twice in a row, let me display other Aadhaar types, right? So let's say the third time, the field officer can actually have the borrower sign through, say, Aadhaar biometric or Aadhaar face. But let's say then UIDAI itself on that third attempt is facing downtime, right? So Aadhaar itself doesn't work, not just OTP, but even biometric and face. So you set a number of failure attempts for this backup type as well. Once this failure limit has been reached, let's say you say that if the third time it doesn't work with backup, allow non-Aadhaar. So the fourth time they try, non-Aadhaar options will actually appear for use, right? So your branch officer can then make the customer do a secure OTP-based virtual sign, for example, right? You don't actually have to break the digital flow. You can continue the digital flow while ensuring your people on the ground have to offer an Aadhaar option first, right? And this order of cascade and what I've told you just now is just an example. Like the actual order of cascade, what is made available in the cascade, what your primary eSign type actually is, what your secondary eSign type actually is all customizable by you. But the basic point is that your eSign system is not simply an eSign, like an API generated link that opens for a single transaction. It should actually orchestrate and support multiple eSign options with conditional availability in order to actually ensure that in all rural lending scenarios, you actually have an answer that keeps the process digital, right? So anyway, our story continues and everything is sorted now, right? Like you have the SDK, you have 2G, 3G, you have backup e-sign options with auto routing, you have multiple e-sign options along with a cascade system in place. Great. So you finally try and you're confident now that this is going to work, right? But then you realize the flow is in English. Most e-sign flows are in English, right? And the customer feels alienated. And in many cases, even the field staff feel alienated by this flow. It seems unfamiliar to them. It's in a language they don't understand. And they switch to paper, right? This is a real issue. We take it for granted, but imagine if you had to do an e-sign flow in a language you didn't understand, right? A picture on screen, right? A simple e-sign interface, which if this was in English, a language you all understand, you would do this in probably less than a minute. Now it's not in a language, we've rendered it in Chinese, right? It's super hard to understand, right? You are not going to succeed in building a paperless process if your customers and field force experiences the flow like this. It's just not going to happen where they are actually just trying to memorize buttons rather than actually understanding the flow. And even data bears this out. Most rural Indians are not fluent in English, right? And even a lot of your field staff will not be comfortable in English. Yet many think that an e-sign flow will magically overturn a process that people on the ground are already used to. It really won't. What you need to ensure in the flow for it to actually work is complete vernacularization, right? Both the and document itself, which is obvious, and the interface that the e-sign is happening on both need to be in vernacular, right? Like buttons, consent, next steps, they should also be in a vernacular language. So to do this, there is a slightly complex process in the backend, like how we would go about doing this, but it's very doable, right? So what you need to do in the backend and what lenders have done in the backend is prepare your documents in all languages that you need, right? So here we've used KFS as an example. Let's say for a KFS flow, prepare as many KFS as languages that your borrowers speak and keep this stored somewhere, right? Either in your LOS system or in your document execution system, right? Then have these templates configured to a specific e-sign workflow corresponding to that language. This would be in your document execution platform, those workflows. So you either store the templates in your LOS or document execution platform and you have a workflow configured in your eSign or document execution platform. Then on the front end, what you do is in your field device, you build a language select screen at the beginning of the journey, just like in an ATM, right? This screen, each button would be mapped to a specific execution workflow in the backend. So when a borrower, field officer offers the borrower a choice of language, when the borrower clicks on a language, the document execution workflow you have configured corresponding to that language actually rolls out on screen in front of them. It that workflow, remember, is tied to a document in that language, and that workflow, the interface will also be in that language, right? So every time the borrower, like you can ensure that whatever the language the borrower chooses, the entire e-sign process, including the document, is in the vernacular language. And I know this is a question many of you are asking, that this interface on screen right now, right? The entire interface and document in a vernacular language is a good to have. If you can switch to the next slide. But in your existing process, you collect, say, a vernacular declaration, that's fine. Like, why do this complex backend exercise? The thing is that the RBI itself has been crystal clear on this in the past 5 years. In almost all regulations that RBI has passed, especially those relevant to rural dominated loan products like gold, KFS circular, which applies to all rural lending products. The RBI has prescribed several mandatory vernacular requirements, and they've been very clear in these that the document and communications have to be in vernacular, right? There are multiple regulations with this. So these regulations explicitly do not permit that simple vernacular declaration that you collect. They actually need both the document and the interface around it in vernacular in order to comply, right? So you need both interface and document in vernacular. So now we're done with the first two buckets, making the flow technically feasible and making the flow practically feasible via accessibility. We've now gotten past the basic can it work issues. You've gotten past the accessibility, will it work issue. Now, the final issue is will it actually be safe and secure, fraud prevention? Because if ultimately there is fraud in the new digital process, your customers will lose trust in the system itself, and RBI, of course, will lose trust in you. So, in rural lending, we've encountered three primary types of fraud that lenders seek to prevent. One is customer using someone else's Aadhaar to sign. So, it's like actually not their signature technically on the loan agreement if it goes through. Two is impersonation. And three is, of course, agents, field officers doing the entire process at an unauthorized location, right? So you need to plug in these three holes to have a largely fraud-proof process for rural lending use cases, right? So on the first one, it's simple. Have an Aadhaar eSign verification system that blocks Aadhaar eSign from happening if, for example, eSign certificate does not match the customer profile, right? But not only do you need this simple system, but in India and especially in rural India, documentation is not exactly straightforward, right? People's name, their spelling on Aadhaar might differ from the name they've given you during KYC, right? It's a small spelling gap, right? And a simple verifier would actually block these cases and flag them as fraud. So your eSign verifier needs to be slightly smart as well, right? So one thing we've done, for example, at Legalities, we fine-tuned our own model that distinguishes between genuine name discrepancies and fraud. So this basically analyzes whether the mismatch is within acceptable parameters and then screens for actual cases of fraud and screens them out, blocks them, and allows genuine cases to go through. And these parameters are controllable by you, right? So that's eSign verification. The next type of fraud, impersonation of the borrower and maybe impersonation of your field force themselves. For this, you can add a face capture layer which tracks who has actually signed, right? That face will show up in the audit trail. And then if you want, you can also add a face match layer where not only is the face captured, but it's actually matched against an ID proof that is then recorded in the audit trail, right? A two-layer system that one detects whether, say, a face is captured, and this should have a liveliness check as well, right? Whether it's a real face or not, that will allow you to track because that will be visible in the audit trail. And then there's an extra option where you can actually match that face against an ID proof and block the sign there and there if it doesn't match, right? So through this, you can build a multi-layer check against impersonation without actually deviating or going away from the eSign flow, right? And we'll show you all of this in the demo in the next 5 minutes. But before that, the final step, right? Sometimes you want to prevent agent fraud by restricting locations they can collect borrower signs from, right? So for example, you may want to track whether they are actually at the borrower house or not, right? So for this, you can implement a GPS capture, which records in the audit trail where exactly the sign happened. So post facto, you can actually track your RMs, right? Some organizations take it one step further and they say that I don't want my sign to happen anywhere but the branch, and it's mandatory that it has to be at the branch. So for this, you can actually implement a geo-fencing as well, right? Which blocks e-sign that happen outside an unauthorized location, right? So not only can you track with GPS capture, you can also block with geo-fencing from it happening anywhere outside your branch. So that's the first part. Thanks for bearing with me. I think it's the longest first section so far in any webinar we've done. So that's a full checklist for features you need to convert a basic e-sign process into something that actually works in rural India at scale, right? So if you've tried e-sign for a rural lending use case and it hasn't worked or is stuck somewhere, there's a good chance your reason and the fix for it are on this list, right? Because as discussed, eSign is not a simple API implementation. It's an infrastructure issue. document, like it's a infrastructure for documents, right? Just like you have infrastructure for payments, right? So you need to ensure the things on screen in the backend and front end, not just integrate, say, Aadhaar eSign, OTP eSign into your flow, right? So that's the first section. Now that we've actually covered the practical fixes, and we'll again, as I promised, at 12:40, we'll show you the demo to actually make the flow workable. Let's come to a slightly harder area, which is actually convincing people internally to implement in eSign as an infrastructure process, right? Because internal push will always be just implement this simple API. Why do you need like a full stack infrastructure? It just seems more expensive. And when you're in the room with them, the points sound really good. But let's actually unpack this and show why it's like how you can actually show ROI, right? And it all starts with a fundamental misunderstanding of the true ROI of going paperless, right? And whenever I bring up this term, people say that everyone knows the ROI, it's 2025. We know why you should go paperless. You don't need to repeat yourself. But when most people say this, their understanding of ROI is actually what you on screen. You switch from paper to digital. So obviously you don't have to spend on the paper anymore and you save those costs, right? Printing, storage, things associated with the physical paper itself. But the actual costs of remaining physical are far higher than the direct costs. Think about things like turnaround costs, time costs, right? If it takes you a full day to get a document signed, it slows down the amount of loans you can give per branch per day, right? Reducing your branch throughput. This is a clear real cost. It won't show up in your internal discussions today when you're discussing ROI of eSign. Or think about the man-hour costs, right? Operating paper, printing, fixing, filling up sheets, verifying details, filling in details. It all adds up to roughly 2 hours per branch per day. That's 2 hours lost at your branch that your team is spending on a compliance task of paperwork rather than a business task. And finally, you have things like compliance issues. What happens if you have to retrieve a document, physical document, and it's damaged? What's the hassle involved? What are the costs involved, right? All of these are very real costs, but they somehow, in a lot of cases, never actually reflect when you're actually discussing the ROI of doing a proper eSign implementation. So fundamentally, the first part of the ROI model is actually understanding the cost of paper and flipping that to understand the exponential benefits of going paperless, right? Because succeeding with eSign is not just about saving some incremental costs. It's about fundamentally transforming the leg of paperwork, this compliance leg of the journey, into an actual structural advantage for you that has fantastic business benefits and fantastic benefits for your operations. So we did a ROI analysis with two MFI clients, primarily in rural India, and calculated these savings, right? So for a large MFI, it was about 90 rupees saved per document and 55 minutes saved per agreement that they were signing. And with another MFI, it was 81 rupees per document saved and whopping 20 hours per document saved, right? They were earlier taking more than a day to do the document. Now they can get it all done in the branch on the same day, right? So simple eSign seems tempting and easier to justify at procurement stage because yes, if you're just looking at it at an upfront cost stage, it's cheaper, but the costs you pay in very short time are much greater with simple eSign, right? It's harder to implement. You need more internal resources. It does not actually have proper maintenance and support. Like we spoke about that manual backup process, right? And most importantly, because of the reasons we've talked about, a simple eSign is just not going to work for high volume rural lending use cases, right? If you wanted to work on the ground, like you a simple eSign won't do, and you'll end up paying the costs of paper that we've discussed, right? So yes, you've saved on the upfront investment. Your procurement team is super happy, but on a process level, on an ROI level, oh, sorry, you have succeeded on an upfront investment. I mentioned fail. You've succeeded on upfront investment, like everyone is happy on the cheap upfront investment, but you've actually failed at a process level, at a fundamental ROI level, because paper continues to remain default in these scenarios, right? So we like we have our ROI model available to you. If you want an ROI report, like we will take you through how our ROI model works. We'll take you through how exactly it calculates the ROI. We'll ask you some questions about your use case so that we can prepare this report. So if you want us to run an ROI model with you, please vote yes in the poll. If so, we will reach out to you for a call and then we will discuss your use case. We will take some numbers. We'll show you how the model works and you'll understand the data points we need. They're very simple. They're 3 to 4 data points which can be publicly available by just going down to your branch. So it's not confidential or proprietary data that we want from you. And then we'll generate your custom ROI report that you can then use internally to make the case for this switch. So just vote yes and we'll reach out to you. And in case you don't vote yes and later you want it, reach out to us, reply on the email that we send you within the next 48 hours. And just before we go into the open Q&A, final plug, as I mentioned, legality document infrastructure allows you to deploy paperless journeys across rural lending use cases in a fast, easy, and compliant way. We can take you live in about 2 weeks, right? With very little tech involvement needed from your end. We've also launched two new additions. One is Sign Station, a simple doc signer utility to e-sign agreements at scale that are very simple, right? Where only your signature is needed, where you don't need a customer signature. And a final plug, our biggest new release, Consent In, which is an end-to-end platform for DPDP and privacy compliance built for the needs of Indian BFSI. We will also be sending you two live playbooks, right, on how to set up a paperless gold loan process at the branch level and how to build an RBI compliant digital KFS flow. So with the recording, you will receive links to these two playbooks. Hope you enjoy them. And we will be launching an upcoming playbook on how to implement eSign flows that are actually accessible, right? We will launch this playbook shortly. If you want early access to this playbook, you can sign up for our weekly updates facility via WhatsApp or email and just scan this QR code. But before that, we'll show you a quick 5 to 6 minute demo of all that I've actually talked about. And over to you, Shubhesh. I think we've received one question in the group. So while Shubhesh is setting up, I'll answer that question. So the solution is, where mobile number is not linked with Aadhaar, is it legally valid? So the answer is, you can't do an Aadhaar OTP in that scenario, but you can do biometric and you can do face. So what we find in rural lending use cases is most lenders are switching to Aadhaar biometric as primary and Aadhaar face as the backup. So you avoid this question altogether of what happens when there's no linkage. And if you do a non-Aadhaar option like a secure virtual sign, which is OTP based, that is perfectly legally valid for most loan agreements, right? So we can discuss your use case and discuss whether your agreement, whether a non-Aadhaar option is permissible or not for your agreement. For 95% of loan agreements, non-Aadhaar options are permissible. Yep, over to you, Shubhesh.
Great. Thanks a lot, Aditya. Can you confirm if my screen is visible?
Yes.
Great. Hi, everyone. So in next 5 minutes, what I'm going to show you is I'm going to show you a demo GLG flow with a KFS and a loan agreement. And for this, we've prepared like this mock app of what application would be open on your agent's tab. It could also be the app or website that you offer directly to your consumers. But here we are taking a app which would be open on your agent's tab. Once this is done, I'm going to show you how to set this up in legality. And again, this screen that you see right now, this is just like a mock app I've made for the agents tab. So they'll click on new JLG loan. The first thing they'll have to do is, this is the first thing that we showed again even in the presentation, that you'll have to build a ATM like menu of all the languages, right, that people in the area that you're lending in speak. So let's say these are the commonly spoken languages. Your agent selects, let's say, Hindi. So your entire interface should also be then available in Hindi. But let's say it's not Hindi that people speak. They speak Marathi. So as you'll see, everything has been changed to Marathi. It seems like Hindi because they're very similar languages. But I switch to, let's say, Bangla. So if you'll see, everything should change to Bangla. I'll go back to Hindi because I understand Hindi and English. Yeah. So they'll fill the application form for the borrowers. They'll proceed, they'll do the KYC, and once that is done, they'll launch the KFS agreement. So as you'll see, this is a fully filled KFS agreement. It's in Hindi because we chose Hindi previously. But let's say you had chosen some other language. Let's say you had chosen Kannada. So this agreement would have been available to you in Kannada, and this button, if you see Aage Bhade, this would be available to you in Kannada also. And I'll just show you how this button and the interface looks. While I can't change the language of the agreement because this has already been executed in Hindi from the start. Had we had chosen Bangla previously, it would have been in Kannada or Bangla. So let's say I've chosen Kannada here. So if you see, the language of the interface changes. I'll switch back to Hindi. And this information, you can pass it directly from your LOS LMS This is the same information you would have passed in the application stage. Another thing I wanted to show you here is one thing we mentioned during the demo, or sorry, rather during the pitch, and I'm gonna do it. So I'm gonna set my network as 3G network, which is quite common in rural area. Your implementation team would be quite familiar with what I'm doing. What simply put, in my Chrome browser, I've set my network as 3G network. So even though I have a very good working Wi-Fi system, the system that you'll see right now, rather the demo you'll see right now, would be on a 3G network for this KFS. So I'll just click on Aage Bade, and this is all happening again on 3G. It asks for my eSign consent. If you see, the eSign consent is also in Hindi. And actually, I just wanted to show you how this eSign consent changes as I switch my language. So let's say my language is Odia. I'll click this. If you see, this language changes. You're choosing. So I'll just switch back to Hindi. Sorry, I keep switching it back and forth between languages. I just wanted to show everyone that, this functionality of how it works. I'll click on Dastaveez sign kare. My KFS has been signed. Now what's going to happen here is once my KFS gets signed, I will get the sign on my WhatsApp along with the secure audit trail. I've already received it. So if you'll see, I've received the fully signed KFS and the audit trail. So this is the audit trail and this is the KFS. Here is my signature, which I just did. And in this audit trail, every detail about me as I opened this document till I signed it would get captured, including the device I'm using, the browser I'm using, my IP address, as well as my consent that I had provided in a vernacular language. So if you'll see, this is in Hindi. Had I chosen some other language, this would have been in the same language. Now let's go back to the agreement that we had just signed. If you'll see, this got signed entirely again in 3G network. And when you're implementing your eSign system, this is the test that your implementation team will have to do very aggressively and very thoroughly to ensure that this works in rural India. So I'll just close this before I proceed to loan agreement. And because I want to take your focus onto something else. Once this is done, you don't have to trigger anything. The loan agreement can be configured in a way as soon as your KFS is done, because your customer is right there in front of the agent. You automatically take them from the KFS to loan agreement. There will be no additional click involved there. Automatically, as soon as KFS is signed, you direct them to the loan agreement. So this is my digital stamp on my loan agreement. It has a unique ID for the stamp. It has stamp serial number. The state's emblem is also printed on this. And on this, we deface this and make it available to you. Plus, in the document also, if you'll see, we've put the same unique ID number for the stamp as well as the stamp serial number, so that when you get the physical stamp after you've executed it, you can match it very easily that, this agreement is for this particular stamp. So this is my loan agreement in Hindi. Again, I'll click on Aage Bade. And this is the first fraud prevention feature that we wanted to show you, which is a GPS capture. It's capturing my location right now. If you want, you can geofence it to your branch as we showed you previously. I'll click on Aage Bade. Now, this is a instruction that's been given to me for face capture. It tells me what's exactly going to happen. This, in a way, is telling your borrower that this is what's going to happen. This is what you're expected to do, and these are the rules you have to follow for this face capture, so that they're not taken aback suddenly that camera gets switched on and they can see their face in this app. So this is the face capture. Okay, so this failed because I didn't follow the instructions in the screen. As you would have seen when I was moving my head, there were some instructions happening. Yeah, so this time I followed the instructions, so my face capture was correct. And what was essentially happening is the AI was trying to establish whether I'm a real person in front of the camera or I've put a photo in front of the camera, so that in the field, your agent can't just put a photo in front of the camera to do this face capture and get away with it. Now, you can choose whichever Aadhaar eSign type you want for your, or whichever works for your borrowers. For me, I'm going to do Aadhaar OTP sign. I'll give my eSign consent and I'll be taken to the ESP portal. Now, right now, this is a redirect, but we're also working on a new way to run our workflows wherein this thing will open within Legality app itself. So I've given my consent to Protean. Now I'm going to enter my Aadhaar number. So just give me a second. And you can also screen right now, like it's white, it's fully Protean branded. If you want, you can also put your own logo, your own colors onto the screen. It's available for both Protean and CDSL. I think Verasis was also working on it, but we get to get confirmation if that's live with them or not. So I'll just enter the OTP which I've received on my mobile number. I'll verify OTP. And this is done. Like this has taken me 5 minutes because I was also walking you through it. I was explaining it to you. But in the field, your agent would not need to explain it as much as I've explained it to you. So literally this entire process for both KFS and the loan agreement can be done within 2 to 3 minutes, down from like hours, which it usually takes companies. And I'll quickly show you the loan agreement and its audit trail also. Before I take you back into the product dashboard and show you how it's actually done. So this is my digital stamp. If you'll see, here is the signature I just did. And here is a signature which was automatically affixed for the MFI who had executed this JLG agreement using a doc signer. And again, you don't have to do anything for this automated signature. It gets automatically affixed to the agreement within 15 to 20 seconds. And this is the audit trail for this loan agreement. If you'll see, it will have my face capture. It will also have my GPS location capture that had happened. Plus, again, the eSign consent captured in a vernacular language. So yeah, this is how it would be on the front end for your borrowers and for your agent. But how do you set it up? All you have to do is you have to set it up on the back end once, and then your agents and your customers can very easily start using it. So I'm just logging into my Legality account. Yeah, so this is my Legality account. This is where you'll have to configure your workflows. Workflows are basically just like a skeleton of what you want to, how you want your document to execute, right? I want my KFS to be executed in a certain way. I want the customer to just use a OTP-less virtual sign or what we call quick sign and be done with it. But I don't want to enable or disable those settings every time I'm executing a KFS, right? So what I can do is I can just do one-time configurations. For that, I'll just create a workflow. So I'll create a workflow. Let's say this is AFS workflow. For this, you again select a template or you pass your KFS as a PDF from your LOS LMS. For now, I'll select a template that's already been made on my Legality account. Had it been a loan agreement, you could also do stamping the way I had shown you previously. Like my agreement had a stamp, right? So all you need to do is just enable this stamp toggle and choose which stamp you want. But since this is a KFS, I'll just toggle that off. Then I'll go to next. This is my KFS. And if you'll see all of these template field data, I need to either fill while I'm sending this document from the dashboard, or I can also configure or integrate Legality in a way that this detail automatically gets passed from LOS LMS to Legality. And the agreement that goes out to the customer, it's already pre-filled so that your agent can't do a blank form signing. For now, I'm just gonna, while creating a workflow, you just click on next. You don't need to fill this. You'll need to fill when you're executing it. Then you add the number of borrowers you have. Let's say in a JLG group, there are 3 to 5 borrowers. So you just add 5 borrowers to this. You select from one of the many eSign types available to you. Since it's a KFS and we would want something quick and easy, so we'll choose a quick sign. You do this for everyone, every borrower, and once you're done, you can also enable and disable other options. Let's say you want to send them notifications on email, SMS, WhatsApp, wherever you want. Or you want to enable some security features like the GPS thing we showed you, or you want to enable liveliness feature or a face match feature. but this would be more relevant for loan agreement. So, but you can do that as well. Another thing, if you are executing a loan agreement, you want to block the user from Aadhaar, right? For that, let's say if you're using Aadhaar eSign, all you need to do is you need to enable verify signature detail and toggle on which parameter you want to verify it. You can enable smart name verification, which is the AI powered model we showed you. You can match it to the title, state, gender, whatever you want. Or you can also do a combination of two, three things so that you know the fraud prevention or recent blocking is foolproof. And once you're satisfied with your choices, all you need to do is click next and choose where you want the signature. Let's say I just want my signature here, and I can copy it to all pages. So automatically this e-sign will be available on all pages in the same place. So this is one signer. For second, I want to, let's say, place here. For third, I want to place here. And for fourth, I would like to place here, and so on and so forth. Once you're satisfied with all of these things, you click on save, you confirm, and that's it. It's that easy. Now all your agent will have to do is, whether they are in your LOS LMS app or the agent's app that's available in their tab, they can click the button as I showed you previously in this app. Just give me a second.
Yeah, I think Shubhash, thanks for that. We can move on to open Q&A. So if anyone has any Q&A questions you want to ask, please ask in the Q&A box, or you can raise your hand and we'll give you mic access. As mentioned, if you want to stay up to date with similar webinars like this, regulatory updates, industry updates, product updates, do scan the QR code and join our weekly updates facility. We'll be online for about 2 minutes. If you have any questions, do ask them rather. And otherwise, we will be available. You can reach out to us at legality.com at any point in time. So just go to legality.com and reach out to us. With that, I think we'll end the webinar. Thank you so much for attending.